Mark. Good to see you. It's that time of year, so I have to ask, will there be a September effect? September, of course, as you know, has a reputation for being the worst month of the year for the stock market. Historically, it's been the weakest month for the S&P with an average decline of 0.5% since 1950. So we look at history again for perspective, not predictions, but is the September effect real?
It definitely has been, even in my career over the last 20 plus years, where you see some weakness in September, and it has been historically the weakest month of the year. And so I would watch out for those times where you see kind of exaggerated selling in the marketplace.
Mhm.
And so I am a little cautious when you come into September, October naturally.
So a little bit more. It's not just an anecdote here.
Correct. Although I wouldn't build a whole philosophy or an investment plan around it in the
Mhm.
sense that, it's 50-50. Half the time Septembers are positive, half the time Septembers are negative, at least in
Mhm.
recent history. But we have seen kind of those exaggerated, as I would call them, sell-offs that ultimately lead to some bounce back. But we've seen those bad times. And in 2008 was the big one where you got Lehman Brothers and the Lehman Brothers event in mid-September. Of course, that's the extreme event, and we're not looking for something like that. But there
Right.
does seem to be the time period where maybe companies get out some of the bad news if they have it and regroup and get ready for 2023 if they're having a bad, or the following year if they're having a bad current year. So that's where
Okay.
kind of the news flow, or where it kind of I think emanates from.
Right. Okay. So I want to take a look at September's performance. This was a chart supplied by you to the Brookstone Capital Management Advisors. So September's performance against other months, and I don't need to remind you, it is a midterm election year. You say that this graph illustrates that the market may be anticipating a weaker market ahead. Why is that?
So we saw a pretty good rally from really mid-June up until mid-August, and it brought it all the way back to what it's called its 200-day moving average, which we talked about, which is kind of a general trend line for the marketplace. And the market was very oversold in June. So
Right.
July and August saw a pretty good rally, at least to mid-August. And at that point, I think the market turned its attention to realizing that, oh, maybe it's run a little too far too fast with the bounce back. We have September coming up next. And so we saw the market really start to peel down and really drop pretty quick in terms of adjusting to that reality that we're heading into September.
Okay, so now I'd like to pivot to the cycle composite, which the market has tracked pretty closely this year. Let's take a look at that. What does this suggest?
Sure. And the blue line there is kind of the 10-year, the 4-year, and the 1-year cycle combined. And in a chart like this, you're just looking for tendencies, how markets respond to the historical seasonal tendencies, and really looking at longer term. But what it does show is September, October weakness. And as you mentioned, there's a midterm election coming up, and midterm election cycles, you have historically seen weakness up until about the midterm election. And that's what this chart really reflects, that, okay, this might be a soft period here.
Hmm. And so, will you be surprised then if you see more selling in the market?
Well, we've seen it already from the mid-August, and the market almost anticipated this to the first part of September. And then looking over some of the data from Morningstar, for example, their research, they came out with a piece that showed that they think stocks are 15% undervalued as of
Hmm.
today. So we have a little bit of pause in that we have the Federal Reserve planning to raise rates. The expectation is for 75 basis points, or 0.75% higher. So I think the market is just pausing to digest that at this point. So I don't know if I'd be surprised, but at the same time, I think the market's anticipated a lot of that, and has pulled back already, and where you could see some sideways action or some choppy seesaw action going forward as we try to work our way through up into the midterm election.
Okay, we'll see what happens next then. Mark, thank you very much.
Thanks, Erin.